David will be stopping, answering your questions that are in the chat box, as well as taking any conversation you might have and opening the floor up for questions. So with that, unless there are questions from the audience about anything so far or Zoom housekeeping needs, I am honored to introduce David Bryan, the Ag Incentives Program Manager with the Department of Conservation and Recreation. He has been a huge help from the association side in preparing for this presentation, and a joy to work with at the partnership level we have with the department. Know many of you have probably worked with him pretty closely too, especially if you are staff. And I know he's pulled together a really great presentation that our own staff have gotten to preview a little bit of. So with that, I'll keep it short. And David, thank you so much for giving us your time today and investing the opportunity to educate our directors and staff a bit better on the VACS program itself.
Well, thank you so much, Kendall, and good afternoon, everyone. I've been curiously watching the list of names come down the screen, and I know many of you, but there's probably many more that I don't know yet, so welcome to everyone. As Kendall said, this is the VACS 101 program. We're specifically gearing it towards directors, but for those staff, especially new staff that are on board, there's certainly things you'll hear today that will be very relevant to your work. I will say as we get started that we are basically going over the basics of the VACS program, which if you look up the manual online, it's like 564 pages or something like that. So we will really be hitting the highlights in these next couple hours, but my objective is really for those directors out there, for you to just gain a better appreciation of different things that may come across your desk at district meetings. You know, through the years, there may be things that you may not deal with for a couple months or maybe even a couple years, but at least you'll have heard of them. And then, you know, when an issue arises, you'll know you can work with your staff or contact DCR or whomever to address the specific issue. But anyway, we'll go ahead and get started. And as Kendall also mentioned, please do, if you have any questions as we go along, put them in the chat box. I'm going to try to keep an eye on that, but Kendall's going to keep me straight. So getting started here, we're going to go over a brief history of VACS very quickly. Then we're going to really spend the majority of our time this afternoon going over the program guidelines, and this especially the various items that will apply directly to district directors. And then finally, we'll go over some of the top VACS practices. So what are we actually doing? What best management practices are we putting down on the ground? Not going to hit all of them. There's, you know, over 50, actually closer to 100 different BMPs between our tax credit practices and cost share practices and CREP. But we will hit sort of our highlights and the ones that we see being put on the ground the most across the state. Okay, so with that said, the history of the VACS program. VACS officially began all the way back in 1984, and originally it was for two basins, the Chesapeake Bay watershed, which of course is about half of Virginia, as well as the Chewan River Basin in the southeast portion of the state. So that Virginia at that point decided to start offering financial incentives to agricultural producers who were interested in putting into place voluntary best management practices for water quality. There were 6 eligible BMPs at that time, which looking at the VOTE program now, we have greatly expanded that. So within a couple years, I guess the program was popular enough that it expanded to statewide, which was fantastic, and it's been statewide ever since. Funds were distributed to each district based on how agriculture affects water quality, and it obviously has changed and developed through time over the past several decades, but that is really the root core of the matter. The VACS program is a partnership between the Department of Conservation and Recreation and each individual soil and water conservation district to help producers get conservation on the ground. It's a water quality improvement program, and I want to stress this pretty heavily. For those of you who work with some of our other partners, such as NRCS, for those who don't know, I actually worked with NRCS for about 8 years before I came over to DCR. NRCS does look at a variety of resource concerns, But DCR's focus and the VACS program's focus is water quality. VACS is here to reduce nutrient, sediment, and bacterial contamination of Virginia's waterways. So there's certainly other resource concerns that we help along the way, things like soil erosion and soil health, but our #1 priority is water quality. The program is funded by the taxpayers of Virginia, and essentially we are trying to find the most effective way, most cost-effective way to implement BMPs while protecting the interest of the taxpayers. If you work with DCR staff long enough, especially our engineering team, you'll hear the phrase least cost, technically feasible. So we're trying to get things done in the cheapest way possible that's technically feasible, such that it will work on the ground to address the water quality problem. Okay, key VACS funding sources. So just to step back a little bit to talk about where the money comes from, and we're basically going to start here at the General Assembly, and we're going to sort of walk through, how it gets to the districts and then how it gets to producers through the BMP work. So every year, 10% of the state surplus funds, if there is a surplus, goes into the Water Quality Improvement Fund, or the WQIF. Obviously, there's some years like program year 20, which ended this past June, where there was a massive budget deficit. But when we get this money, the first thing that happens, is we have various earmarks or special projects where money is set aside for this or that. So just to give you an example, the Department of Forestry usually gets a chunk of the WQIF money. The VCAP program, I believe before, has gotten some of the WQIF dollars. CREP, which is our partnership program with the Farm Service Agency to establish riparian buffers, that also generally gets a carve out from this money. After those are taken care of, and that's at the discretion of the General Assembly, the rest of the money is deposited in what we call the Virginia Natural Resources Commitment Fund, or VNRCF. I guess I should also mention that we also take a chunk of the money and put it into reserve, which is sort of like an emergency fund for the down years. Another way we get money for the VACS program is through real estate recordation fees. This is a $10 fee on each real estate sale, and these funds are deposited into the VNRCF to support water quality efforts in Virginia. So once the General Assembly officially appropriates that money, gets everything ready through their budgets, Virginia Soil Water Conservation Board has to approve the allocations of that money to the various districts. We'll get into that in a second. And then DCR has a grant agreement between, again, the agency and every single district, which your individual district, if you're a director, will have to sign. Essentially, the grant agreement specifies a variety of deliverables that have to be met in exchange for VACS funds. VACS funds include both cost share funds as well as associated technical assistance dollars that help fund the technical staff. A few other things I wanted to mention. Again, this is a little bit out of our hands, but policymakers mandate at this point 70% of VACS funds go to the Chesapeake Bay watershed and 30% outside the Bay. It hasn't always been that way, but I think the most recent split was 65-35 or 60-40. Can't remember off the top of my head. But either way, this is all the emphasis on the Bay these days. A majority of funds are going to the Bay watershed. Additionally, every 2 years, DCR undergoes what's called the non-point source assessment. And this looks at a variety of land use, agricultural, and environmental data sources. And I'm going to put a map up in a second. Here you go. And the watersheds in Virginia are all mapped and ranked as part of this effort into high, medium, or low priority watersheds in terms of water quality issues. After all this work is done, basically this model estimates and ranks the pollutant loads, and again we're focusing on phosphorus, nitrogen, and sediment from each hydrologic unit in the Commonwealth, And then the watersheds are ranked, like I mentioned, and you can see on the map. 20% of these are deemed high priority watersheds, 30% are deemed medium, and 50% are deemed low priority watersheds based on the pollutant loads and the variety of other soil and environmental data. Then funding-wise, it's flipped. So 50% of the funding goes to those high priority watersheds, 30% to medium, and 20% to low. So this is one of those big things that is very important in determining how much money is going to each county and thereby each district. All right, so the districts and DCR have these annual grant agreements, and they know at the beginning of the year how much money they'll be receiving, both in cost share and technical assistance dollars. And then what happens? Well, at that point, the districts really are the face of the program when working with the farmers throughout the state. So we can't thank the districts enough for the work that you do to get conservation on the ground through the variety of best management practices. So districts should continuously take applications from producers. However, every district does this a little differently. And there are some items that we'll talk about this morning that for you as district directors, you know, every district has to make these choices as to how they're going to go about these things. So this is an example. As far as recruitment goes, there are some districts that have a advertised sign-up period, or perhaps 2 advertised sign-up periods. They might say, you know, from July 20th through September 20th, we're taking applications. We're going to rank all those applications and distribute funds accordingly. Other districts have a rolling sign-up, which essentially means they take applications as they come in and they rank them every month and dole out the funds or obligate the funds until they run out. And then there's others that use a combination. So they might have an advertised sign-up period, but if they don't use up all their funding, they will continue to have a rolling sign-up period afterwards. Again, these things are not mandated by DCR. It's up to each individual district to decide how they want to handle this issue. Okay, so when working with the producers out in the field, one of the most important things to note is we got to figure out who is eligible or not. Now, I should say first and foremost, we're always about providing technical assistance to any producer that's out there that needs help. However, the VACS program does have specific eligibility requirements in order to receive funding. So, for example, there's 3 main keys here. First of all, the land has to be used in a bona fide program of agricultural management, and that could be agricultural, horticultural, or via forest products. There has to be a minimum of 5 contiguous acres. There has to be gross verifiable receipts in excess of $1,000 per year from the sale of those products. There is an exemption there on the forestry side of things. So obviously we understand that someone who has a rotating pine forestry farm is not going to be harvesting pine trees every single year. It's going to be over a period of time. So there is an exemption for on the forest side. And again, it's for each of the past 5 years. I will note, as a side note at this point, that DCR has a technical advisory committee that's made up of a lot of our farm industry, nonprofit, district, state agency, and other partners that gets together every year to discuss relevant issues. And this has been a strange year for the TAC just because of COVID, like everything has been strange. But one of the things that we're looking at through the TAC this year is to reduce that number of years from 5 to 3. And most likely that is going to be to go through. So currently in our PY21, program year 21 cost share program today, a participant would have to have been a producer for at least 5 years. In the future, it may be 3. Let's see, I see a comment here. The 1,000-year minimum threshold is for the entire property in production or per acre. Yes, it's for the entire property. So as long as they can prove they've made off at least $1,000 per year, then they're good to go. It's not $1,000 assigned to each acre and thus $5,000. All right, the last bullet here is something that we added into the manual this year. There has been some historic discrepancies between districts. Some have traditionally worked with horse equine producers, others have not. And this was a question that the TAC looked at, not this year, but last year. And it was decided that for purposes of the VACS program, commercial equine operations, such as breeding, boarding, and training facilities, are eligible for funding if they meet the 5-acre, 5 years, $1,000 requirement. So that's not your, your person that has a backyard horse. This is for a commercial equine operation for breeding, boarding, or training. Okay. One other thing I wanted to note, because this comes up from time to time, is that eligibility is tied to the land, not to the participant. So what that means is, I want to give an example. So this happens a lot in the East with lease changes. So let's say Farmer Brown has been farming for 10 years on a given piece of cropland, but he loses the lease, and then Farmer Joe comes in and takes over Farmer Brown's land. That land has been in production for well over 5 years. With $1,000 of income, even though Farmer Joe is new to farming that land. But Farmer Joe could go in and go ahead and sign up for cover crop or nutrient management or whatever else. So I think that's one important caveat to these rules, is that eligibility is tied to the land. Finally, if there are folks like state or federal government agencies that want help, we can provide technical assistance, but we cannot provide cost share assistance. Okay, so you've determined someone's eligible and you want to sign them up. So what do? There are a couple of things that are absolutely always required. For those districts board directors out there, you will get used to hearing the terms the contract part 1, contract part 2, and contract in part 3. Part 1 is essentially our state application. And it is very important and absolutely required for every participant to sign. And I'm not going to detail every line of it, but I'll show you a picture here. This is what it looks like, or at least the top part. I encourage everybody to read the fine print when they sign up for VACS. But anyway, that's required. W-9, of course, is a tax form. It's important to note that any VACS funding, which is state funding, is taxable income. And the district, though, it should not be giving tax advice. So make your participants aware that it's taxable income, but we do not need to be giving advice to anybody about how they should handle that income that they're going to be getting. Finally, some districts choose to use, there's a self-certification form in the glossary section of the VACS manual. Some districts use this, others don't. Again, that's one of those things that you as district directors, can make a decision on, working with your staff, as to whether or not you want to use that. Again, it's optional but suggested. Okay, then there's a few other things that you have to consider when you're signing somebody up. USDA, we obviously, DCR and the districts have relationships with several other agencies, federal and state, that we have mutual respect for, and we try to stay in line with. So if the district is notified by USDA that any applicant is in violation of any Farm Bill provision, perhaps maybe they've been farming wetlands or whatever, the applicant is not eligible to receive cost share funds from the district until that is all cleared up. Additionally, problems identified as part of an ASA complaint, that's an Act Stewardship Act with the Virginia Department of Agriculture and Consumer Services. When there's a problem identified and a corrective order has been issued to the participant, they are no longer eligible to receive VACS funds to correct whatever issue that is. Finally, along some of the lines of DEQ, if there is a DEQ enforcement order, again, we cannot offer cost share. The only exception is if the cost share has already been applied for before the enforcement order comes down. So in other words, there's a problem, the participant recognizes it, he applies for cost share with the district, he's good to go on that side, and then DEQ sends an enforcement order. Well, we've already got a contract with the person, so we can go ahead and move forward. Okay, so that covered a lot of the relationships, so to speak, and some of the respect we have for other programs. There's also a variety of other issues that we look at when funding a VACS practice. One of them is natural resources, and especially threatened and endangered species and historic resources. So as part of the conservation planning process, we do look at these other resources of the Commonwealth. And we do have a formal review process for ground disturbing VMPs that are receiving state funds. The tracking program, for those directors who aren't familiar, this is something that the staff use regularly. It is essentially our large database where every practice is mapped and all the information regarding the participants is recorded and the financial side of the program is recorded. Anyway, the tracking program is set up to automatically run a query once the BMP is digitized. So district staff will go in and map or digitize, fancy word for that, the BMP, and they will run the resource reviews. And if there is a hit, for example, let's say there's a threatened or endangered species that shows up, that may require reaching out to the agency such as Department of Historic Resources or Department of Wildlife Resources, it used to be DGIF, in order to get that issue resolved before the project goes forward. Let's see, I see a question. Will USDA be notified by DCR or the district for all proposed projects? USDA would be the one notifying the district directly if there was an issue. Obviously, if we don't know about an issue, or if the district doesn't know about an issue, it sort of is what it is. But if USDA talks to the district and tells them, then yes, we cannot move forward. A lot of districts are co-located. Some of them aren't. There's a variety of relationships across the state, some better than others. But yes, I think I'll go back to the slide. Top bullet, if the district is notified by USDA that there's a violation, then we cannot move forward with cost share funds. But the burden is basically essentially on USDA to let the district know, otherwise they may not know. Certainly if you're working with a participant and they say they're in trouble with USDA, then probably that's a red flag as well. All right, moving forward. Priority considerations. So as part of our ranking process with the VACS program, there are two different items we'd like to review today. There's priority considerations, and which are statewide and all districts follow. And then there are secondary considerations, which are local and are unique to your district. So we'll get to that in a second. So first of all, in order to move forward with funding, an application must meet one of the following considerations to be eligible for funding. They need to be located in the highest ranking hydrologic unit in the district's service area, The field needs to be located within or upstream of an impaired stream segment, which is essentially a TMDL area. The field meets a third highly erodible land criteria, that is the determination made by our NRCS partners, or the application will implement a BMP within an approved resource management plan, which is a whole nother topic. With that said, so if you want funding, you have to meet one of those, but there is a huge list of what we call priority practices that are exempt from those rules. So a lot of our animal waste practices, there's practices to protect groundwater, prevent gully erosion or critical areas. I'm not going to get into the huge list today, but if you would like it, it's in our VACS manual on page 8 of the guidelines. or I can, if you want to contact me, I can send it to you. But essentially, most of our high priority practices that I'll be talking about later in this presentation are exempt from those rules at the top. And essentially, if you get one of those applications in your district, you can move forward with ranking it. Okay, secondary considerations are developed and used by districts to prioritize applications. Now, this is basically the district's opportunity to look at local water quality concerns. And this should be an effort of the district board and the district staff should be working together each year. I will note that there are some districts that just choose to use the same secondary considerations verbatim year by year by year, and that's fine. And there's others that sort of tinker with it every year and add or subtract items according to their will, and that's fine as well. But essentially, secondary considerations are a set of written narrative statements accompanied by a ranking worksheet. A lot of the Western districts in particular have fairly developed ranking worksheets which assign numerical criteria there's a variety of questions on their worksheet, and they'll give points based on the value of the project according to that question. There is a good amount of flexibility here for producers, or sorry, not for producers, for districts to develop these secondary consideration worksheets. Now, every year they have to be approved by the district board as well as DCR by June 30th. And once they're in place, they have to stay in place for the entirety of the year. So one thing that's really important is that we treat every single participant who walks in the door the same, playing by the same rules. So once we have ranked our first application using this ranking worksheet and this set of considerations, we can't go change it during the year and then have the next farmers face a different set of rules. That's not fair to the farmer, and is also setting one up for litigation. Okay, moving forward again. All right, funding caps. So the district has the money, they've got their ranking system set, and now they're starting to look at their projects and divvying up the money that's been allocated to them. One thing that's important to keep in the back of the mind is funding caps. Now, some of you who have been around a while may remember that in the past, VACS did have what we called practice caps, which was a maximum amount of money for any given practice. Some were 50,000, some might be 70,000, whatever. It varied across the board. As of this past fiscal year, PY20, there are no more practice caps in the program. There is just right now one participant cap sort of across the board of $100,000. So $100,000 is the maximum dollar amount that any producer can receive in a fiscal year through the VACS program. And that could be all of it as one practice, or it could be multiple practices. Maybe the person signs up for a stream exclusion system and cover crop and nutrient management. Or maybe it's just $100,000 going to a large animal waste facility. Whatever the case may be, $100,000 is the participant cap. I will note that RMPs, which are resource management plans, for participants who sign up for those, this does not count against the cap. With that said, there are some rare occasions where we have some very expensive VMPs that come across our desk, specifically in the world of animal waste storage, and occasionally in stream exclusion. We just get very, very large projects. So the variance procedure is a process that's in place that allows districts to request an exemption to the VACS cap. I will note that this is not additional money coming to the district. This basically means that the district board, if let's say your allocation was $500,000 and you had a project that was eligible for the variance that would have a cost share rate at $200,000, the board would have to decide whether they wanted to ask for a variance on that project if they wanted to spend 200 out of their 500 on this one project. That is something the district board has to decide before a request goes up to DCR. The district board is completely within its right to say no. If they don't want to be spending over $100,000, the participant cap on a given individual, again, that's completely within their rights to say so. However, if they do recommend a variance, there is a process that the staff will go through, sending up a packet to DCR. And I'm not going to get into those details in this presentation. That's more for the staff. But if that variance request is made, it goes up the chain. Typically, there is a 3-person committee composed of the Conservation District Coordinator, usually the one that is associated to serve your district, myself, as well as one of our ag engineers, Amanda Pennington or Ben Chester, depending on where you are in the state. And the 3 of us meet to discuss the project. We might ask for a field visit or multiple field visits or more information, and then make a determination of yes, approving the variance or denying the variance. And we will reply to the district board. It usually is not a long turnaround, but there's a max of 45 business days. That I don't think that's ever happened. Okay. So the variance, I guess one thing I did skip is that there's a long list of practices at the bottom here. Those codes may not mean much to you at this point, and that's okay. Essentially, this is for our large stream exclusion and animal waste project. Okay, so we know what our caps are. Maybe we've explored a variance. We've gotten cost estimates together for all of our producers who've applied. Next, the conservation plans for these individuals and the applications are brought before the board for approval. Again, the application's the part 1. The contract part 2 and the conservation plan must be signed and dated by a board member. Here is a slide showing you what the part 2 looks like. Again, the staff will help with this. They'll fill in the contract number and the applicant name and contact info, the instance number, basically all the details about the BMPs are going to go in here, all the numerical details, I should say. The district employee will sign there at the bottom, and then it's under the authorization right here. I don't know if you can see I was trying to circle it. Yeah, it worked. That's where the district board director would sign. Could be the chair, could be someone else, but whatever the case may be, once it's approved, the district director will need to sign this form. So the district should be seeing those contract part 1 and these contract part 2s, district directors, that is. Okay. Cost share rates. So we continue our discussion of cost share. As you work with your district staff, you'll find there's 3 main types of cost share that are available for the producers that we work with. Some practices have a flat percentage-based rate. For example, SL6N is our stream exclusion practice with narrow buffers. It is purely a percentage-based rate. So we go through the design process. The district staff will map the practice, find out how many troughs need to be installed, what type of troughs, how many feet of pipeline, and so forth and so on. And we'll come up with an estimate, and then, we'll take let's say 80% or 75% or whatever the relevant cost share percentage is, and that is what we can offer the producer. Other practices like SL8B, which is our standard cover crop practice, that is a flat rate. So it doesn't matter how much you spend on it, you're always going to get the same. It doesn't matter how much the producer spends on it, I should say. They're going to get the same flat rate. Now, some of those, like SL8B, and we'll talk about this a little bit later, do have various rates depending on what you plant and when you plant. But nonetheless, per acre, it is a flat rate and we'll get back to that later. Finally, we do have a few practices like SL1. SL1 is essentially our whole field conversion, where we take cropland and plant it into grass. We have cost share on the component, so in other words, on things like the seed that's necessary to do that planting. And then we also have a flat per acre payment or bonus incentive payment. So you got basically 3 different categories that in all of our VACS cost share practices fall into one of those. I also wanted to note while we're here that VACS can be piggybacked with other programs. So for example, the EQIP program is one of the big programs with NRCS, our federal partners. However, we only allow piggybacking up to the maximum cost share rate as allowed in the VACS spec. So to give you an example, an animal waste facility in the VACS program pays 75% cost share. So if NRCS wants to pay 50% and the district wants to pay 25, great. If the district wants to pay 50 and NRCS wants to pay 25, great. If they want to split it 74-1, that's fine too. I don't know why you would. But the district is the ability to work with their local partners to spread their money through piggybacking. The only thing that we do not allow, and there's actually a statement on the Part 1 application to this end, is what we call double dipping. So double dipping is when let's say the farmer walks into the district and asks to sign up for precision nutrient management. It then goes over to NRCS and signs up for precision nutrient management unbeknownst to the district. And then in that case, they are signed up for the same acres, same time frame, same practice, all that stuff. But the 2 agencies aren't sharing the cost of the practice. They are actually paying twice. That's called double dipping. And it is not allowed by the practice, and it is considered breaking the contract. Now, there certainly may be times where the person gets away with it, but hopefully we're able to catch it in a good amount of time. But we want to make sure that our participants are avoiding double dipping and they're signing a contract form that says they're not going to do it. Okay, so once the district board approves the various practices at their monthly meetings, the district will notify the participants of contract approval, and that's something generally the staff will do. There is a letter that can be generated by the tracking program, or some districts may have their own letter that they send. But regardless, they need to let the participants know. For practices where the cost of any one component, so a component would be something like the fence or the pipeline or the trough or the ag waste facility, if any component is estimated to exceed $30,000, we do have a required bid process that we have to go through. DCR went through an internal audit this past year, and this is something that we focused on, was trying to clarify the bid process. So there is a bid solicitation sheet that is sent to the producer. Sorry for flipping back and forth. And again, this is only for when a given component is estimated at $30,000 or more. The project is essentially conditionally approved pending those bids. So once the information is sent to the producer, it is their responsibility to get back to the district within 120 days. If they don't get back to the district within that time period, which is very generous, 4 months or so, then the district will simply cancel that application. If they do get back and they hand in all their appropriate information and got their bids and so forth, then the practice will be switched to approved. That's something that the district staff will do in the tracking program. So the board, from a board director standpoint, you don't need to approve the same contract twice. The first time you're just approving it, the district staff behind the scenes will mark it as conditional, depending on whether the participant gets their bids. And then once all that's taken care of, it'll get switched to approved, and it doesn't need to come back before the board. All right. Occasionally, and I had a question about this, or semi-related to this, just today from one of our CDCs. Occasionally, a district will approve a practice, and then some unforeseen circumstance comes up during construction. Perhaps there's a dry well, or perhaps there's unexpectedly you hit bedrock and you have to completely redesign or reroute the project. Whatever the case may be, it's a rare thing, but it does happen. And so if the district has additional allocation available, they can go back at a future board meeting and approve additional cost share. So basically, the estimate for the project will be redone. We would still use the same cost share percentage, and then the board could approve the additional cost share for that project. This is something that would, again, have to go before the board, and the minutes would have to include the amount and reason for the increase. I'll take a water break real quick. Okay, average cost list. I also had a question about this today. Every district annually should be developing an average cost list of BMP components. This should be done prior to the first application being approved. We get the question that comes up, as material costs fluctuate up and down, whether these can be adjusted. And the answer is yes and no. Yes, they can be adjusted year by year, but they should not be adjusted midstream. It's sort of like secondary considerations. You don't want to have one farmer getting cost share based on one rate, and then your next farmer getting cost share based off another rate. Well, they may all be getting the same rate, but it's based off of different component costs. What we recommend that districts do is the district boards usually have a technical committee. That board and the technical staff should work together, and if they see anything in their area that is greatly increasing or decreasing in price, to keep track of those things so that next year they can adjust their cost list. Now, I will say that some districts do utilize NRCS cost lists, and that is perfectly fine. The only issue with NRCS cost lists, one, sometimes we hear the complaint that they're low, but two, they typically come out in the fall of the year, like October or so. So the new cost list isn't generally in place until the districts are already well underway with their cost share sign up for the year. So if let's say there's a new NRCS cost list that comes out today, here in October of 2020, the district wouldn't be able to adopt that cost list until July 2021. So it's already about, whatever that is, 9 months or so behind. So this is just something to keep in mind. Again, some districts prefer to do that. It's an easy way to just rely on the NRCS efforts, but they are not required to lean on the NRCS cost list. You can develop your own. Okay, we also recommend that every district has a means established for producers that are completing the work on their own. We don't have any set across the state rule on this. Obviously, self-billing is okay in the sense that we realize that some producers, farmers, are going to do their own work as opposed to hiring out a contractor, and we still should be offering cost share to them. But districts do need to have a plan to address self-billing via their average cost list to avoid intentional or unintentional gouging. At the same time, we don't want people to totally undersell themselves. Participants obviously can claim things like their own time, materials, fuel costs, shipping, hauling, etc. I mean, these are the things that a contractor normally would, their overall pricing would reflect. So again, DCR is not going to prescribe a one-size-fits-all way to deal with that. It's just something for districts to keep on their radar as they deal with the average cost list issues. Okay, so cost share payments. We talked a little bit about cost share rates earlier. Now we're going to talk about the payments themselves. So the practice is getting to completion, it's certified, it's going to be paid by the district. We only allow payments directly to the entity that signed up the contract part one. So if there was a unfortunate situation like a divorce or something like that, you know, we still have a contract with whoever signed that initial application, or if an entity changed or that type of thing. I will say we do allow what we call transfers of responsibility. So if an entity dissolves and is replaced by another, they can transfer the responsibility by mutual agreement between the two entities. Likewise, if let's say a farm is sold, we have a transfer of responsibility form so that the old owner could transfer it to the new owner. And we'll get a little bit more into that in a little bit. Payments may not be split between two participants. We do allow two-party checks for lending institutions. That's where perhaps there's an animal waste facility that has a loan from a lending institution, and the lending institution wants this two-party check to be signed. We do allow that now. 1099s must be issued for any entity that receives payments over 600. And again, none of this happens, payments or otherwise, until the participant and the district have certified the practice is complete. Tax credits. This is another issue that district board members are going to find coming across their desk throughout the year. It's very important. Even though cost share generally gets most of the attention in the VACS world, we do offer a Ag VMT tax credit. It is essentially equal to 25% of total eligible costs, not to exceed 17.5, and that is based off of the out-of-pocket cost of the producer. So let's say the district comes up with an estimate for a project using their average cost list of $100,000 is the eligible cost. The cost share rate in a particular practice is 75%. That means the person will receive $75,000 in cost share, or that's what they're approved for. As for the remaining 25%, which would be $25,000, that will be out of pocket, 25% of that $25,000 can be claimed as a tax credit. Every tax credit has to be board approved before implementation of the practice. And it's one important thing, and I think we'll touch on this a little bit more as we go forward, is that every tax credit that's issued by the Code of Virginia, they are required to have a conservation plan. So if the board sees a tax credit coming across their desk or their table, so to speak, there also needs to be a conservation plan for all of those tax credit practices. All right, this is something that Carl Thielgoin, who is the Conservation Planning and Training Coordinator, he sent me this slide and wanted me to insert it in. Conservation planning really comes before programs. We're trying to work with producers to find the best means possible to address the resource concerns on their land. In the VACS program, we have a DCR conservation planning program that a lot of the district staff have been certified in. However, we also recognize and support USDA's conservation planning program, and there's also the resource management planning. A lot of our BMPs do require a conservation plan. I'm not going to go through the whole list because it's too long, but one of the best pages of the manual, if you are interested as a director, is if you just Google Virginia VACS Program Manual 2021, there's 2 different links to it. You'll find it really easy. I did it before this program today. One of the first pages of the manual after the cover, in fact, it's the second page, the second through, I guess, the 4th or 5th, is a list of all the VACS practices. In that table, not only lists the practices, but whether they tax credit, whether they're eligible for tax credit, whether they're eligible for cost share, do they require a nutrient management plan, do they require a conservation plan, are they CREP eligible? There's a lot of information there. So it's just an easy cheat sheet, both for district staff and directors. It's something that would be good to print out and have handy. Again, though, I want to emphasize that a lot of our practices require conservation plans, but tax credits specifically, anytime there's a tax credit by code, we have to have a soil conservation plan approved by the district board. Okay, I'm going to transition on to another topic. Carryover process. So some of our practices are relatively short term, like a cover crop. If you sign up for a cover crop, you're going to plant it in the fall and you're going to terminate it in the spring or harvest or whatever the case may be. And so we do not allow what we call carryover on those practices. Basically, if you sign up in a given fiscal year, like for example, a sign up for one of these practices today, it has to be completed by the end of the fiscal year on June 30th. However, there are some practices that are by nature longer term, and they require multiple years in order to get implemented on the ground. So this list of practices on the screen here, including a good amount of our nutrient management practices, are what we call one program. They have one program year completion date, and they are eligible for carryover. So essentially, the participant has one program year to get them done, but they're eligible to be carried over into a second program year. And the board, for those directors on the call, are very involved in this process. Essentially what it means is that if, let's say I signed up for one of these practices today, prior to June 30th of 2021, which is when we would cross over into a new year starting July 1st, the district has to assess all BMPs, and if justified, i.e. under construction, the district board, or in some of these cases with nutrient management planning, it's not an under construction, it's more in the works, so to speak. The district board may take formal action to extend the completion date until June 30th of 2022. So essentially giving it an extra year. The staff will go into the tracking module and change the status of the practice to carryover. However, the participant only has this one additional year to get the practice done. After that, it's either completed or it's canceled. They only have one further year to go forward. Okay. Now this list is too long for the slide screen here, but there are other practices that have two program year completion dates that are also eligible for carryover. This is a lot of our structural practices. You'll see on this list, for those who can read it, sorry it's so small, this isn't even everything. FR1 and FR3, that's our forestry practices. Our SL6s are our stream exclusion practices. Our WP4s are our animal waste facilities. And this isn't the most updated list. All right, I want to give you an example because it's easier to show via an example. So let's say that there's an SL6W, which is again a stream exclusion practice with a wide buffer, and the participant comes into the district and signs up in March of next year. So this is a program year 2021 practice. That participant will be able to finish out the rest of 2021, but let's say they just, they've started construction, but they haven't been able to get very far. That practice should be carried over by the district into PY22, the second program year, starting July 1st of 2021. No formal board motion is required. And again, that's because these all have two program year completion dates. So they have two program years, the one in which they sign up and the following one in which they have to be completed. All right. Then if it's not done by the end of that next year, let's say June 30th, 2022, the district board with justification can approve a carryover into a third year. So again, they automatically get to the district board if there's justification to do so, i.e. the project's substantially under construction, hopefully it's something like 75, 85% done, they can approve that further extension. That is up to the board to do so. If it's still not done by the end of that third fiscal year, the district can request a carryover from DCR for moving the project into program year 2024. That's a 4th fiscal year. That request will come up to myself. And if it is granted, that will be the last fiscal year that participant has. Now, I'll say when those practices come up to DCR for requesting a 4th year, if it's a situation where it's like 5% completed, we're probably going to say no. If it's something where it's 95% completed and it's, you know, it's just almost there, but it needs a couple extra weeks or a month or whatever, that's fine. But just, you know, keep that in mind. But again, I think in the back of your head, it's a little confusing. Take some time to think about this over and over. You're going to get the slides. You can look at this again. There's a maximum of 4 fiscal years for our structural practices. After that 4th fiscal year, it's game over.
David, can you, before you move on to the next slide, you've got a question or two in the chat box. And while I think I can explain it, if you don't mind speaking a little more clear to the difference between a program year and a fiscal year.
Yeah, I'm sorry. I've been using that interchangeably. The state has a fiscal year, monetarily speaking. We usually use the word fiscal in the money sense. That runs from July 1st of a given year to June 30th of the next calendar year. Our program follows the same pattern. So it starts on July 1st and it goes through June 30th. So I apologize for any confusion. I sort of use them interchangeably. Kendall, do you have anything you'd like to add to that?
No, I think you did a great job. You're right. The program year and fiscal year often still fall on the July 1, but you're right, they could be different. So I wanted to make sure you clarified. Before you go too far, a few slides back, you had someone also ask who can actually develop a conservation plan, and then someone said who can develop a resource management plan. Don't they require certifications? So if you want to just briefly touch on how our technical staff are handling that.
Sure, absolutely. So DCR has a conservation planning program, and there is a long list of courses that district staff take in order to become certified as a conservation planner. And once they do that, they are certified to write these conservation plans. I will note that NRCS also has their own conservation planning program, and a lot of our more senior district staff that have been around a while were certified under that program and have been grandfathered in to an extent. So you may have some folks who haven't gone through the specific course list that DCR offers, but they're still certified conservation planners. And Carl Thielglen is the main contact for the conservation planning side of the DCR. Resource management planning, likewise, has its own list of requirements where someone can be certified as an RMP developer. And I don't know how many folks of the districts would be certified there. Mostly it is private RMP developers in the ag industry.
Perfect, thank you.
Thank you. All right, lifespan and maintenance requirements. This is something that district boards need to be aware of because occasionally the few trouble spots that come up from time to time involve this issue. Every time a structural practice in particular is signed up for, there is a lifespan that's associated with that practice. So for example, a stream exclusion practice might have a 10-year lifespan in some cases. Animal waste practices have 15-year lifespans. And the participant is expected to maintain that practice for the length of the lifespan, which officially begins on January 1st of the year following BMP installation. So if let's say I installed a practice in October of 2020, and it was certified by the staff, and the district board it had been approved, it's paid now. And January 1st of 2021, that is when my lifespan would begin for that BMP. All right, changes in control of land, such as sales or loss of lease, do not exempt a participant from maintenance requirements. Like I was talking about earlier, there is an option for a person to sign a transfer of responsibility form. So when a farm is sold, or maybe when a farm is handed down from generation to generation, from parents to children or whatever, we have a form that the two individuals or two participants can sign to transfer the responsibility for that BMP. But that's a voluntary thing. We have no way to enforce that. And if let's say in the case of a sale, if the new person refuses to sign that form, again, that's not something for the district to get involved with. The original BMP is still the responsibility of the original applicant. So it's really important, especially for those of you who work with a lot of participants for leased land, that we encourage, if you're going to put in a practice with a long lifespan, it's really advantageous for that participant to have a long-term lease. Okay, in the case of death, the board has the ability to waive maintenance requirements. Obviously, a dead person cannot maintain their BMP anymore. Verifications. This is our fancy word for spot checks, which are conducted annually by district staff and DCR. Traditionally, the district technical staff will go out with the conservation district coordinator to some randomly selected BMPs. Generally, those that are in their 8th year or more of their lifespan, in order to check on them and hopefully see that everything is good. Some cases, obviously, there's things we come across where there's a damaged or destroyed practice. And in those cases, we do have to work with the participant, and it's their responsibility to make a fix. So once a practice is found to need maintenance or is destroyed, it's very important that the district follows these rules sort of to the T and keeps careful notes. Hopefully everything goes smoothly and the practice is fixed, but if not, we need to have a good paper trail. So first, the district should verbally contact the participant and provide notification of the deficiency. Document the date and the conversation in the conservation planning notes in the file. And again, this may be something that the district staff are going to take a lead on, but I do want to note that there are some districts where the district board is very involved in verifications, and I'm thinking of at least one case where several district board members actually go on the verification spot checks with their staff and DCR. But again, it varies across the state. Anyway, once these issues are found, the participant has to be contacted. They should also be provided a written notice via certified mail within several weeks, 2 weeks. And basically, you just try to relay the issue, what needs to be fixed. You know, in some cases, if it's been a while, the participant might need to be reminded that they're in a state contract, and so forth. The district can provide the participant up to 6 months of a grace period, and I underlined up to 6 months. It's very important that I would clarify that is the maximum. I've had one district from the northern part of the state question me before about whether they had to give up to 6 months because they had a repeat offender, and the answer is no. You know, if the district board determines that it doesn't make sense to allow 6 months to get whatever fixed, that's fine. Let's say it's just as simple as you need more gravel around the troughs at a given project, and it's something that is easily done. The district may say, you know, we're going to give the person 60 days as opposed to 6 months. That's up to the district. And so hopefully as we've been going through this, I've been trying to emphasize points where the district board has some decision making to make. Okay. At the close of the grace period, the practice does have to be re-inspected. The deficiency hopefully has been corrected, and if so, great. If not, the district has to provide written notice to the participant that repayment of funds is required in 60 days. If that doesn't go well and they don't fix it and they don't repay, then we do have to work with the Office of Attorney General for assistance in reclaiming funds. So that's, you know, especially as we go through this process, it's so important, so very important that the district board and staff, you know, have good records and everything has been well documented along the way. Because a lot of times, you know, we get these things fixed and we move forward. But if there comes a situation, which happens from time to time, where we need to go to higher authorities, you need to have all of your I's dotted and T's crossed, so to speak. Lastly, I wanted to mention that return of funds with DCR in the districts is actually very generous. There are some federal programs where you have to pay everything back. In the case of VACS, we have a prorated formula that's in the manual, but essentially what it is let's say you've got 5 years left of a 10-year lifespan, then you only have to pay 50% of the original cost share back. You got 1 year left of a 10-year lifespan, you have to pay 10% of the money back. So the good news is for the participant is if they choose to pay back, it's usually not terribly bad unless it was just a gigantic project. All right, there is a hardship process. This is one of those things that, again, as a district board member, I just want you to know about. You may never in your district career ever have to deal with this. It is extremely rare, but occasionally we have situations where there's just some crazy, unusual circumstance where a BMP is found to not be in compliance, but it's really for reasons that are out of the participant's control. And we're think about things like someone, you know, has terminal cancer and has been in the hospital for 3 months or something terrible. You know, something like that where it probably is not the right thing to do to go after that money. Because of whatever situation. So there is a process outlined in the manual where the board can make a request to DCR for hardship on behalf of that participant. They can submit some suggestions, if they will. So for example, they might request that DCR waives the requirement altogether, and this is why, or maybe they say, well, we suggest instead of 100% of the prorated funds coming back, we're going to give them a break and do 50%. Whatever the case may be, there is a process to allow that for extreme circumstances. There's also a process for practice failures due to weather. So occasionally, we all know, you know, droughts, floods, even things like tornadoes, hurricanes, they do happen. And it may cause a practice to fail. For example, let's say there's a massive flood that wipes out a stream exclusion system. All the stream fencing gets taken out by trees as they go down the flooded river. That happens on occasion, unfortunately. So there is a process where the participant can request additional cost share to fix the practice. The caveat is that in sort of a trade, the state can offer additional assistance, but their BMP instance lifespan is reset. So let's say they have a 10-year contract and they're in year 3 and a tornado comes and wipes the practice out and they want to get it fixed. We can offer additional assistance, but they have to sign a new 10-year contract. This is also something that has to go through DCR for approval, and I'm not going to get into the details today, but I just want to make you aware that this is available. Okay, those district directors out here, this is very important, especially this time of year, although I don't think many will need to take advantage of it this year because it's been a fairly normal year. District boards of directors may authorize a one-time per planting season extension of our cover crop planting dates. This is for SL8B, which is our standard cover, our normal cover crop, and it's only for our standard dates. So those of you who are familiar with our cover crop options, we have early dates where you get paid a bonus for getting in your cover crop early, and then we have standard dates. We cannot extend our early dates, but we can extend our standard dates, but only under certain circumstances because of extreme acts of nature. And I want to emphasize that this is only for extreme acts of nature. It's a maximum extension of 14 days. And if the dates are extended by 14 days, so too is the amount of time required for the participant to reach 60% cover, which still has to be reached. If we extend some dates and the participant doesn't meet the things that are required of that cover crop, it still will have to be canceled. Okay, documentation is required. There are several ways to do this. In some cases, and I'm thinking of a hurricane, you know, believe it or not, there's a hurricane in the Gulf of Mexico right now. You know, we're going to have a late October hit on, I guess, Louisiana, Alabama area. It could happen in our area as well, in the late fall. So in the case where the governor has requested a disaster designation or the Farm Service Agency has issued a disaster declaration, the Board of Directors can approve a cover crop date extension for an entire county, city, or multiple jurisdictions, depending on if the governor's order covered those given areas. So let's say, you know, if you're a multi-county district, like Culpeper or Thomas Jefferson or Hanover Caroline, something like that, it's entirely possible to be in a situation where you're able to use the governor's or FSA's disaster declaration to extend cover crops in one county, but not in the other. With that said, these are going to be large, high-impact events. This is going to be extremely rare. Okay, but there are occasions where we may not have a widespread disaster, but on a local level, there are issues. And so this is probably the most important thing I want to talk to you about on the cover crop side today. If there is no governor or FSA disaster declaration, there is a third option, but again, there's a high bar in order to implement this. First of all, to move it forward, we can no longer do it on a county basis, but we can extend our dates for hydrologic unit codes or watershed codes. And the districts should have a list of HUCs in your areas. And if you need more information on that, you know, you can ask me. It's also online on our one of DCR's websites. Okay, so we can go HUC by HUC. The Board of Directors, in order to do this, needs one, documentation from a local credible source, such as the Virginia Cooperative Extension Agent or the Agricultural Research Center, which clearly references the unusual extreme active nature circumstances and their impact in the HUCs in question. When this process was being developed by DCR last year, I believe, we did work with upper level staff at Extension, and we did receive their approval to have the Extension agents be this local credible source. Okay. Additionally, though, there has to be documentation from a professionally recognized climatology expert, such as the state's climatology office, or maybe something like the National Weather Service stations, like in Wakefield, that reference the unusual EAN in the HUCs being considered for an extension. And that is, again, probably the higher bar of the two, but you need both in order to move forward. I will say that there are certain tools that we would allow. For example, in the case of drought, there's such thing as the United States Drought Monitor, or the Palmer. I know it's being cut off, but it's the Palmer Drought Severity Index in cases of drought. You know, those would be respected sources from which data could be pulled to justify the decision. But again, both are required. Okay, anytime this happens, we do need, DCR has to be notified. Farmers don't need to formally apply for the extension. If the district grants it, it's going to apply to all the SWCD contracts with standard dates in that area. And again, the farmer still has to meet all the necessary specs within the cover crop practice, including 60% cover. Okay, as far as our other cover crops, things like our harvestable cover crop and WQ4, which is our legume-based cover crop, the DCR director, Clyde Chrisman, in consultation with the Virginia Soil and Water Conservation Board, may authorize boards to provide an extension for certain planting dates up to 14 days. That really is going to be a rare occasion. It happened a couple years ago, I think 2018, I think. But again, that's going to be in the case of like a statewide disaster. It's very, very rare. Okay. Excuse me. My voice is held on this far, so we will keep going. We're going to switch gears. I've tried to give you all, especially district directors, just a brief overview of some of the key topics that you may be exposed to, whether you're a new director or a experienced director that's been there for a while. Some of these things you might see frequently. Some of these things like extreme active nature or hardship, that type of stuff, you may not see at all during your tenure as a director, depending on how long you keep serving. But I wanted to at least make you aware that there is a process so that, you know, when you or your district staff have to face it, we know that at least these things exist. All right. Now we want to talk briefly about just some key VACS practices. We are not going to attempt to cover every practice, far from it, but just some of the keys, and even some of the details I've covered here. You'll get the slides, or this. I know this webinar will be posted later. I'm not going to go through everything that's on the slides, but just want to, again, make you aware of some of these key practices. So if you're in the Piedmont or in the western part of the state, there's no doubt that probably the bread and butter of the VACS program is stream exclusion. SL6, what used to just be called SL6, now it's SL6N and SL6W, are our premier stream fencing specifications. They're stream exclusion with grazing land management. They require 100% exclusion of the cattle or other livestock from the stream, as well as an off-stream watering facility. Additionally, if we're going to create more than 3 grazing units by the development of a system, we require some type of grazing management plan. Skip, that's important. This practice, and this is a change from in the past, this practice is only for fields that have a live water or a live stream in them, as well as areas of severe environmental degradation. In other words, this is not for upland fields. We'll get to that in a little bit. Let's see, I'm gonna try to get the some highlights. Grazing and haying are not allowed in the buffer that's fenced off. We do have a buffer payment associated with our wide width buffers, and it's important that those are set aside and allowed to grow up, both in grass or forest. When a participant owns both sides of a stream, the livestock have to be fenced out of both in order for us to fund the project. And again, this is only for those fields that have a stream. If there's any other connected fields, upland fields, we have a separate practice, SL7, for that. So N&W, for those of you who are new, this may be all you know, but for those who have been around a while, this is a relatively new naming convention within VACS. N refers to narrow buffers, those that are less than 35 feet, and wide, W refers to wide buffers of 35 feet or greater. This has to do with the efficiency of the buffer and how well that buffer filters nutrients and sediments that would otherwise get into the water body. And for those of you who are familiar with the Chesapeake Bay and the Bay model, we turn in a lot of our data regarding reductions for the Bay model. And the Bay model looks at a 35-foot buffer differently than a narrow buffer. We get a lot more credit for those wide buffers, and therefore we pay a lot more for those wide buffers. For our wide buffer options in VACS, we typically have a buffer payment, and that is something that's new as of last year. So this is a chart that's found in the SL6W practice. And essentially what this chart allows is 4 different options for the farmer. So when the district staff goes out, or if the district board member is approached about a specific project that a participant's interested in, first and foremost, we want to know how much are they willing to fence out. From a conservation perspective, the more the better, but we all know from a production perspective, then it may not be feasible to go 50 foot or more. So they have to make a choice, 35 foot minimum, and this is the minimum fence setback, or 50 foot. Then they will also choose a lifespan. How many years are they willing to be in contract with the state to maintain that system and keep the cattle out of the stream? And depending on what they choose for their setback and their lifespan, they might have a lifespan, a cost share rate as low as 85%, which really isn't that low, or as high as 100%, where 100% of the eligible costs are covered. Additionally, for the wide buffer practice, like the one you see in front of you, we pay $80 per acre per year in a bonus buffer payment, up to $12,000 per contract for 15-year contracts and $8,000 for 10-year contracts. Okay. We also have the SL6N. There are some participants that, yes, I have there's a question, is the minimum setback an average or an absolute minimum? It is the minimum setback, correct. So this is not meant to be the average, it's made to be the minimum. So if I go along your fence line and take random measurements throughout the entire system, you know, if the minimum should be 35 in this case, or options here, the minimum should be 25 or 10 on the SL6N. Note that with the SL6N, we do not pay a buffer payment, and again, that's because we get much less credit for those practices, but in the past, we never used to offer this. Just a couple of years ago, all of our requirements were 35 feet or greater. However, we realized that for some participants, that has been a stumbling block to participation in the program. They just refuse to give up that much land. And so, you know, now we have an option for just a 10-foot minimum. However, they're not getting that extra buffer payment. Cost share, again, is dependent on the minimum fence setback that they choose and the lifespan, and the cost share rate for this practice ranges from 60 to 75%.
David, I've got one additional question before we keep moving forward, and I want to make sure we didn't miss a question in the chat box earlier from Bill Fleming, a new director in Virginia Dare. For stream exclusion, how wide does the stream need to be eligible?
Let's see. Okay, yeah, sorry, I missed that. I'm looking for it and to see it. How wide does a stream need to be?
Yes.
Okay, we last year the technical committee went through circles and circles talking about what is live water or a live stream, which anybody who's ever been involved in such discussions know that it is something that's relatively difficult to pin down. In the end, I'm looking it up as we speak. The final agreement was live water or live stream, which is the term we use in the spec, is a creek, stream, river, or other water feature which has surface flow or creates a surface flow for a substantial portion of the year. We left a good degree of flexibility for the district staff person who's out in the field to decide. We do not have a specified width, minimum, or maximum to establish what is a creek, stream, or river. But again, we are trusting the highly trained technical staff out in the field to make the right decision. So again, I'll just read that definition for you. Live stream or live water is a creek, stream, river, or other water feature which has surface flow or creates a surface flow for a substantial portion of the year. And VACS stream exclusion practices are based off of that definition.
Thank you.
Sure. Okay, stream exclusion examples. Here's two pictures just of some buffers that have been fenced out. Again, we'd optimally like these to grow up in trees, but a grass buffer is great as well. Here's some waters that would be installed as part of our system with some very hefty gravel areas around them. That's fantastic. Anyway, the point is with SL6, the two key things are a buffer and a water system. Those are the two key elements. Now, we also have our WP2 practices. Again, there's an N and a W, depending on if you've got a buffer of 35 feet or greater or less than 35 feet. There are situations where a producer, maybe they just don't want a watering system because of the expense and the upkeep, but there may be a situation where there's no good way to sustain electricity. So let's say it's an area that's in Southwest Virginia that's difficult to get connection to the grid. It would be too expensive. Maybe because of mountain shadows, it's not a great area for solar. And the the district staff and the participant determine that the best thing to do is to use a hardened access point as opposed to attempting to put in a system that's based off of electricity. So in this case, with a WP2 N&W, again, watering systems are not eligible for this practice. And essentially what we're doing is we're protecting the stream by fencing out livestock with the exception of hardened access points or stream crossings. So in a SL6, you may have a stream crossing, but it's supposed to be fenced off at all times except when the cattle are being moved. In the case of a WP2, this is a hardened stream crossing that will actively be used as the place where the cows will get water. It's definitely not the preferred of the two practices, but in some cases it's the only thing that we can do. All right, once again, grazing and haying are not allowed in the buffer. When the participant owns both sides of the stream, the livestock must be fenced out. There are multiple options. The lifespan is shorter, it's 5 or 10 years, pays 75 or 80% cost share for a minimum 35-foot fence setback and a buffer payment. For narrow buffers, there is no buffer payment, but again, based upon the minimum fence setback and lifespan, we have a cost share rate ranging from 55 to 70%. Here's some examples of some hardened access points, some stream crossings. Okay, and then SL7. SL7 is our practice. If livestock have been previously excluded or concurrently excluded, in other words, there's an SL6 going in at the same time, with a minimum 10-foot or 35-foot setback from all surface waters, this practice can be used for the upland fields to connect into a rotational grazing system. So in other words, let's say there's 5 fields and a stream goes through 2. The 2 fields with a stream will be eligible for SL6 to get the cattle out of the stream. That is our top priority of the practices. And then we can extend that watering system into the upland 3 fields using our SL7. And that's depending on the amount that was set, the setback distance, it has different cost share rates. Okay, CCI. This is our continuing conservation initiative. Essentially, it's a way to offer maintenance help for producers to maintain their stream exclusion systems. There's 5 different versions, and they're patterned off of our specs. So as you can see, there's a CCI SL6N, CCI SL6W, and so forth and so on, depending on which practice it's patterned off of. We also have a CCI SE1, which is simply a top-of-bank practice. So if a district goes out and there's a participant who hasn't previously been involved with the district but has done the right thing for the health of his cattle in the stream, and he's voluntarily just put up some top-of-bank barbed wire fence or something, as long as it's keeping the cattle out of the stream, it is eligible for CCI SE1. The other ones obviously require buffers and are a lot more detailed, as they're based off of the comparative practices. There's no minimum fencing or other standards required for CCI. Practices really just need to be working. So the district will go out, and before this practice is certified, they just have to make sure the system's working. Yes, the fences are up. They don't have to be up to NRCS standard, but they have to be up and working. The watering system needs to be working. It may not be a conventional system, but as long as water is getting to the cows, great, and so forth and so on. And finally, this is if it's not obvious, practices can't be in lifespan from any other conservation program. So in other words, if you have a participant who signs up for an SL6, and they're in year 5 of their SL6 and they have a 10-year contract, they can't sign up for CCI until the SL6 contract is done. Forestry practices. I'm going to probably go pretty fast through this, but I just wanted to make you aware. Just some general notes for both of our key forestry practices. We do rely heavily on the Department of Forestry. They will develop what's called a Form 7.8. It used to be called a Form 75 for those of you who've been around a while. It's basically a tree planting plan that specifies the density, the species, and so forth. The land has to have been in cropland, hayland, or pasture land in order to be eligible for this practice. We do not pay for replanting cutovers. Department of Forestry has their own program called RT, or Reforestation of Timberland, in which they do that. We don't handle that here. The plantings have to be protected from grazing. We don't do Christmas tree production, and so forth. Also, our forestry plantings do have a special provision for failures. Anyone who's done tree plantings know they can be finicky and hard to get going at times, and we do have a one-time option that if the practice fails and the trees don't establish, we can authorize additional cost share in a future year to get it fixed. So FR1 is our whole field conversion practice. Basically, it's a land use change. We're taking an old crop field, maybe it has some mass erosion issues, and we're planting it to trees. We have various options based on the lifespan of the practice that's being chosen. Likewise, FR3 is our buffer filter area. This is our riparian buffer practice. It is a minimum of 35 feet. Again, that's that critical distance that we focus on. And then up to the width of the entire floodplain capped at 100 feet. And again, this is, it's not maybe, there's not as many FR3s per se, as, you know, we get so much emphasis on our stream exclusion, but it is a really high paying practice and a very valuable practice that we highly encourage districts to be promoting. Again, in last year in PY 20, fiscal year 20, there I go again, interchanging them, you know, we offered 95%. We still offer 95% cost share on eligible components, in addition to a flat per acre buffer payment, or payment for the buffer, I should say. Okay. Nutrient management practices. We get in the home stretch here, and we're almost done. NM1A is our nutrient management plan writing and revisions practice. This is used for either the development of a brand new nutrient management plan or the revision of an existing plan. And I will say that this is for with working with private planners. DCR obviously has its own nutrient management planners on staff, but this is for privately developed plans. It applies to crop, hay, pasture, specialty crops like veggies and that type of thing. Each plan that's developed within M1A has to cover 12 months of crop management practices. And this is based on soil samples and so forth and so on. Essentially, we are trying to help the producer properly put the nutrients on the ground at the right time and the right rates to minimize the amount of nutrient runoff or leaching. We also have precision practices for precision nutrient management. There's a nitrogen practice, that's the 5N, and a phosphorus practice, that's the 5P. And there are a wide variety. This is sort of, you may have heard in the science world the terms lumpers and splitters. This is definitely a lumped practice. There is a lot packed in here. We cover various technologies such as variable rate applications, zone applications, multiple split applications, and injection. Okay, long-term cover and cover crops. I mentioned earlier in this presentation the SL1, which is our long-term vegetative cover on cropland. This is where we are taking cropland, sort of like with the FR1. In that case, we planted it to trees. In this case, we're planting it to grass. Again, you have to have a cropping history in order to be involved in this. There are various lifespan options, 5, 10, or 15 years, depending on how long you're willing to dedicate that field to the SL1. There's cost share plus an incentive payment. Okay, just some general things on cover crops. We talked a lot about cover crops in the context of extreme acts of nature. But the 4 most common cover crops in the state are SL8, that's for our specialty crops. SL8B, which is sort of our normal cover crop. I'll get to it in a second. SL8H is our harvestable cover crop, hence the H, and WQ4 is our legume-based cover crop. They're all used to establish vegetative cover. They can reduce erosion, but again, our main focus here for water quality is the loss of nutrients. They're all annual practices, so a farmer can sign up year after year. They can elect for, a farmer can choose cost share or tax credit, but not both. Every practice has specific seed types, rates, planting dates, and so forth and so on that are all prescribed in the manual. I'll skip the rest for now. SL8B, I've been calling it our normal cover crop, but the official title is our small grain and mixed cover crop for nutrient management and residue management, hence why I don't say that whole thing every time. This is a flat rate payment where we pay a flat rate of $20 per acre, but there are certain things a producer can do to up their payment because they're better in terms of nutrient reduction. So one, the earlier we plant the cover crop, the better off we're going to be in terms of scavenging for nutrients while the weather's still warm, and the plant can grow as much as possible before it gets cold. $30 per acre. It's so important to get things in early. We offer, again, over 50%, or excuse me, over 100% bonus for planting early. Additionally, rye is generally recognized in its various. There's a lot of varieties of rye. But the tetraploid varieties are recognized for their ability to scavenge nutrients, and we pay a $10 per acre bonus for that as well. I do want to note that all fields are checked by the district in the fall, and we have to assure that 60% cover is reached by December 1st. 60% cover is then maintained through March. Pasturing is allowed as long as that cover is maintained. Harvesting is not permitted, and then at the end of the season, after March 15th, it can be killed by grazing, or it must be killed by grazing, mechanical, or chemical means. I will say that if a producer ever thinks they're going to need grain, they need to be signing up for H, the harvestable cover crop, not for B. SL8H does pay lower, but that's because the farmer is going to be able to harvest it at the end of the season as opposed to terminating it. Manure can be used on 300 acres here in this practice, but there's conditions in the manual. That's unusual, and that's why I'm listing it here. And again, a minimum of 60% cover, districts checking the fields. All right, harvesting is permitted at the end. All right, I have a couple last ones that I want to go over as we cruise to an end. SL11, this is our critical area planting. I'm going to skip ahead to this picture on the right. You can see this is an area where there's erosion in the field, but it looks like it's sheet and rill erosion. It's just a general pattern of erosion. It looks like the participant has some hay bales that have been tossed out there. This is a practice that doesn't require significant engineering planning or anything like that. And it is just an easy, maybe some grading, maybe some shaping, filling, grass planting, tree planting, whatever. There's a 75% cost share on fixing things like this. However, on the left, you'll see that there is a field that has obvious concentrated flow through it. This is going to take a much more designed, engineered fix. You can't just throw grass seed on that in the middle of that crop field and hope that it's going to stick. So this is WP3 sod waterway is the answer to these problems. The sod waterway will reduce the movement of sediments and nutrients by concentrated flow. This does require engineering input, and we didn't get into it today, but district staff can earn engineering authority, job approval authority to implement these things without help from DCR, or DCR engineering services can help out with this. But again, this is also a 75% cost share practice. And these two practices are very important, again, in cropland and in pasture land for basic water quality concerns.
David, before you get too much further, Can I snag
Sure.
you? Before we get too much further into a different slide and different practice, you do have a question in the chat box about what about shrub-based crops?
Okay. What about, in what context? If you don't mind asking, putting in a little bit more details, that'd be great.
James, if you can drop a little bit more in the chat box, or if you want to come off mute and try to clarify before we get too far down into some of those other practice questions.
Well, while he's doing that, I only have one practice left, so I'll just go forward. Perfect. And then we can come back to that.
Thank you, David.
WP4 is our animal waste control facilities. It's essentially, there's a whole variety of things that we do with this practice, but it's a planned system designed to manage liquid or solid waste from areas where livestock or poultry are confined. In the valley and on the eastern shore, we work with a lot of poultry producers. In the Piedmont, as well as the western part of the state, it may be more beef producers. I will say that whenever we're working in the context of animal waste, the first thing that's really important to do, especially because in the beef context at least, a lot of the issues are at feeding locations, we have to ask, is there anywhere else on the farm that the feeding area can be moved to address the resource concern? Sometimes the feeding area is just in the wrong place. It's too close to the stream or whatever. And it may just be an easy fix to move it. The farmer may not particularly like the answer, but if there's a choice between moving the feeding area, a couple thousand feet versus putting up a $200,000 barn at taxpayer expense, again, the least cost technically feasible way of addressing the issue needs to be brought up, because again, we cannot base the decision of putting one of these structures up based off farmer convenience. Also, we need to consider all existing waste storage facilities when sizing the new facility. Sometimes we may be working with an owner, especially in the poultry industry, where someone already has a litter shed or several litter sheds, and because of the larger flock, now they're needing more. We have to consider their entire system and not just create a brand new thing that covers everything. All right, and then also we have to base our animal waste facilities on the existing resource concern. And that in the context of animals means the existing amount of beef cattle or amount of chickens or turkeys or whatever in the waste that they're producing. So if the farmer says, I've got 300 head of cattle, but I'm thinking about getting 100 more, we don't base our designs based off of 400, we base them off of 3. All of our WP4 practices, and there's a family of them, are 15-year practices with a 75% cost share. Just some examples of things that we do. Bedded pack, for example, for beef cattle. Here's an example. Litter sheds, these are very popular, especially on the shore and in the valley, where we're trying to take those piles of litter on the left and cover them up and avoid the rain ever getting to them and leaching or runoff. We also, up in the top right here, is a composter facility. Often the WP4C is combined with our WP4 litter sheds. Here's a manure lagoon, giant practice. WP4B, and I said, Kendall, I'm sorry, I said this is the last one. It's the last family of practices. WP4B is the dairy loafing lot management system. This is similar to our WP4, but it's specifically for dairies, where we're providing the facility to keep the dairy cattle in, as well as a minimum of 3 associated grass loafing lots. For those of you who are familiar with dairies, we have what's called a free stall structure or loose housing. Free stalls are when they have individual stalls, so to speak, for the cow to go into. That is not least cost technically feasible, so if the farmer wants to do it, that's fine. He can pay the additional money to put the stalls in. However, we do not cover that as part of our cost share. So here's an example of a project on a dairy. Here's a dairy bedded pack. And then I'll briefly mention as we close, and I see there's a question that came in about this, so I'll get to that in a second. In this fiscal year, starting on our program year, starting on July 1st, DCR expanded its animal waste facilities. We have a, we're not going to get to the details here, but we have a livestock and confinement practice, the LC. We have an LL, which is for non-bovine loafing lots. That's specifically geared to horses. It's not required to be for horses, but the spec was written with equine systems in mind. FP is for feeding pads, and WP4SF, which is mentioned down at the bottom by Michael Sands, that is our seasonal feeding facilities. We've traditionally done these under the WP4. So in the past, even though the WP4SF is a brand new practice, a lot of the districts have been doing WP4s forever. This year, the decision was made to split out the seasonal feeding facilities into their own practice, hence the SF. But it's really no different than the WP4 used to be. So litter sheds are under WP4, seasonal feeding facilities under SF, feeding pads under FP, equine systems under LL, although it doesn't have to be equine, and then livestock and confinement is LC. I will say one note on the LC, we only, in the program, this was a huge step to allow a practice for livestock and confinement, and it is for worst case scenarios where there is no other management strategy possible in order to solve the water quality issue other than putting the herd completely in confinement. So for a variety of reasons, it's not something we like to do, but there are rare situations, and it should be a rare situation where, again, the only way to solve the issue is to put the system in confinement. So I think that is about it. I'll go to the questions list here. Let's see. What about shrub-based crops? Where would shrub-based crops be covered, or would they? It depends on what you're looking for. Obviously, we don't have any projects to plant shrub-based crops, just like we don't plant other crops. But we do have nutrient management practices, for example, for specialty crops. I think I could look at let me see real quick. So here we go. Specialty crops for the purposes of VACS, the definition is vegetables, tree crops, perennial vine crops, ornamentals, horticultural crops, tobacco, hemp, turf, and other similar crops. So there are certain practices that are more for specialties. Hemp has been one that we've gotten a lot of questions of in the last couple of years. And those would be eligible for any of the practices where specialty crops are involved. Again, the key to the VACS program is that we're trying to address, a given water quality issue. If you're talking about planting, those crops, we don't really have any great fit for that. Under an FR3, there may be some wiggle room to work with the Department of Forestry to come up with an acceptable mix of hardwood trees and maybe some things like hazelnut, like you mentioned, during those plantings. As far as FR1 goes, FR1 is traditionally meant to be hardwood or pine for large-scale plantings as opposed to shrubs. Trying to see if anything else that I think I've caught most of it. Bill Fleming, how are BMPs modified or new BMPs suggested and implemented? Okay, that's a good question. So we haven't gotten into this too much. I think I briefly mentioned it earlier, but the Virginia has a technical advisory committee called the TAC. It meets every year. I think I mentioned earlier, it's made up of I think this year we have roughly 30 different groups involved. Everyone from nonprofits like Chesapeake Bay Foundation and Chesapeake Bay Commission, James River Association, Friends of the Rappahannock, they are all involved. Farm industry groups like the Farm Bureau and Virginia Agribusiness Council, Dairymen's Association, Cattlemen's Association, the Virginia Association of Soil Water Conservation Districts, the Virginia Association of Conservation District Employees, and then there are some state agencies. Obviously, DCR leads it, but Department of Forestry is involved, VACS is involved, DEQ has traditionally been involved, although they weren't that this year. And then some individual districts also have representatives that they, as I guess their district boards have selected to represent them on the TAC, even though districts also, some may just lean on the association and the district employee group. So that's a long way to go, answer your question, but essentially we meet every year. Obviously, this has been a truly bizarre year with COVID, and we've done a lot of stuff sort of unconventionally and electronically, but normally we would have 4 or 5 meetings from July through December to hash this stuff out.
David,
and
I can expand a little bit on that too for you. So to Bill Fleming's question also, the TAC process, you're right, really tackles how the MPs move forward, but a lot of times, and last year, there were over 200 suggestions submitted. So your local district can be suggesting, even if you don't have representation from a district person, you do through the association, your district can submit recommendations to be considered for the TAC to review.
Absolutely. No, that's a good point, Kendall. Usually we have sort of an open comment period, you might say. It's usually late winter through early spring, and then we start the TAC up in July on a normal time frame. This has been everything but normal this year, but anything but normal, I should say. But yes, you're absolutely correct that if a district or other partner had a specific issue that they were very interested in, or a suggestion to the TAC, that the district could submit that, typically again late winter, early spring, to DCR for consideration.
Thank you so much, David. Guys, we have about 5 minutes left on our reserved time frame. I think you've covered most of the questions in the chat box, but anyone, if I've forgotten one or David and I have skipped over, please feel free to unmute yourself, answer and ask any clarifying questions, or continue to use the chat box.
And I did on this last slide include my email address. If anybody, would like to get a hold of me, these days, this is a really good way to do it. I, like most of my employee or coworkers, I should say, we're all at home pretty much, given the circumstances. So, please do send us an email, and I'll get back to you as soon as I can if you have any specific questions on anything in VACS that we've covered or anything that we haven't covered.
Folks, this is your last chance for questions. David, I can't thank you enough. We'll give it another minute just to make sure we've captured everything in case there's a last question coming in the chat box. But I really do appreciate everybody joining today. We could spend hours talking about the VACS program. In a follow-up from today's presentation, a staffer from the association, Maura Christian, will be emailing everybody a copy of David's presentation, link to the VACS manual, as well as a recording of today's session in case you want to go back and reference or share with anybody at your own district. All of these resources will be posted on our association website also, so feel free to contact us or David if you have any questions, and I really appreciate you hanging in there for the 2-hour session, and hopefully all of you found some benefit and value in the discussion also. I think we've captured everything in the chat box, David. We will stay on just a few minutes in case anybody wants to linger and answer questions one-on-one with David. Otherwise, thank you so much for joining. Have a great afternoon, and I hope we connect on a future virtual session. Please make sure you connect on our website and learn about the upcoming ones to come. Thanks, guys. Have a great afternoon.